fascinating. You really like the entrepreneur in the team. You like a lot of stuff about it. You like the deal terms that are being presented. I would argue that if that deal has $50,000 of invested capital from Sigma Partners and they are not doing the deal, versus not having $50,000, versus having $50,000 from, you know, Richard's twin brother, who's not a venture capitalist, that the ease of having that decision come out positive within your partnership, and that the likelihood of you making that investment is substantially greater if it doesn't have the Sigma money.
I disagree, but you know, everybody's got their own firm.
We
think that it's.
We got time for. We did a deal with an EIR from another firm, and that firm didn't put money in. I think it's doable.
We got time for one more in the back.
Great job, guys. I'm kind of blown away by the conversation here. VC panel with multi-billion-dollar funds, and you guys are talking about $50,000 investments. Finding 50 companies that you would back for $50,000 means to me that somehow the whole paradigm is shifted. In that basically you can start a company for much less today than you could have several years ago. Offshore, you've got cloud, you don't need a lot of money for infrastructure, development tools. What is the future of you guys and the billion-dollar funds, and how is that going to affect up-and-coming entrepreneurs coming in where I don't know that you're going to need multi-billion-dollar funds anymore?
Well, two separate questions, right? So there's this the question around what does it mean for the venture industry, the venture class, which is probably certainly interesting to those of us who are venture capitalists. May or may not be interesting to entrepreneurs. Probably the more interesting question is what's it mean to entrepreneurs? I think for entrepreneurs it's good news, which is if you can build your business on less capital, then there's nothing negative about that. It means you can hold on to more of the equity. It means you've got more flexibility. It means you can afford to make a mistake and still recover. So I think all of the trends that you describe are nothing but positive for entrepreneurship.
Okay. No, I agree. But from the venture side, how are you going to sustain venture companies on a very small amount of dollars? You don't need to generate $1 billion fund to do $50,000, $2 million worth of investment. I don't see where the dynamics
all the $50,000 investments that we're describing are predicated on the idea that if that idea turns into something that we think could become a much more significant, much more successful company, is going to require substantially more capital. So there aren't any of those companies that I would imagine any of us backing $50,000 and getting excited about that wouldn't then be followed by a subsequent check that would take us much closer to our traditional investment model of, $8 to $10 to $12 million in an individual investment over a month.
Anybody can start a deal of the day company. You can start it with no capital, but yet Groupon has now raised billions of dollars in order to support their worldwide growth in their platform and their technology. So those businesses, not all businesses, but many businesses, even if you don't need a lot of dollars to get started, if it's working and you're looking to scale and build a big outcome, you are going to need real capital.
For sure, it has started to be a one-day company at this point.
Yes.
Quickly, just any concluding thoughts from you guys, Richard, and just kind of down the line. If not, that's fine.
Enough said.
I have no concluding comments.
This is fantastic.
Foremost, I want to thank Daniel for an excellent moderation of the panel.